All right, I wanted to stay up on top of these with these daily vlogs because you don't get opportunity like this, and this is a great learning opportunity. Even if you're not currently in the market, it's a great way for you folks to learn, especially for new people. All right, so here we go. Couple days to the few more days to election, and as you can see, IB rank is still around 49.53%. I think it touched 50 a little bit. If this chart is easier, let me show you some other ones I can also give you. Um, this is a new one that came out. Let me go to, it's called rank level only. All right, so what this is the same IB rank chart. The only difference is when it gets to 50, it'll turn green. So anytime you see green, that means IB rank is above 50. So what this is an actual implied volatility chart, meaning right now, actual implied volatility for the SPY is at 20.37. Okay, IB rank is the average of its implied volatility compared to itself, over the last whatever year, 52 weeks. So if I go to, if I change this date to, yeah, let me zoom out. Okay, so see over here, back in, what is this, February of this year, IV rank got to 50%. That's when it's green. Okay, so at that time, though, IV rank was at 20, actual IV or implied volatility was at 26.64. You see that to the right? But 26.64 is 50% of compared to itself over the last year, which is why it's green. So I don't know which is easier for you. If you want this script, it's called the rank level script. Let me know, shoot me an email and I can get out to you. Or I can just share my entire chart, meaning if you want, I can load up this entire, I think it's like this. I can see this whole thing, whichever chart you want. I can send you this whole script. You just load it, save it as whatever your name is, and when you load up your charts right here, you can actually load up this, and then customize it the way you want by just clicking this, edit studies or edit styles or whatever you want. You can do whatever you want. Right here is your chart settings, so you can actually, load up a chart. All right, so you can do whatever you want. And then just switch the days to 15, whatever you want. So whatever is easier. Um, I will go back to this just for teaching purposes. Sometimes it's easier. So anyway, as you can see, over the last 12 months, look how long it stayed at 50% or higher. Here it got to 50 IB rank, and over here it got to 50 IB rank. And as you can see, here's why sometimes you want to wait if it's easier. Like for example, if you're saying, should I trade now or should I not? Well, look where IB rank got to 50%, right around, what day was that? Here. Okay, so this is January 19th of this year. So you weren't selling any puts, okay, or you weren't starting to bet that the market will go higher until this day. So that means if you didn't have anything in play, you missed this entire downturn. You weren't even in the market. So this is what I mean by this is a little free advice. So I have quite a few business owner private clients, and they want me to let them know, just tell me when to trade or what to do, and I'll load up, or would you want to know what to do? I tell them, well, if you don't want to watch the screen every day. So for example, in the last 12 months, some of my most wealthiest clients have only made 2 trades. Okay, that's it, 2 trades. And each of those trades, they had 25% of their money in play. So let's say on $1 million account, their trades on average, when they entered them, equaled about 25% notional, meaning about 250,000, let's say, or in 100,000 it'd be 25,000. But they would only do it when this was green. Okay, so for example, if you did that only when it was green, and on this date, right? Okay, you had, look how long it took before IB rank dropped below 50. 1 day, 2 days later, it was down already. And of course, look what happened to the position. Now, if you put on your trade here, guess where your nearest 45 days to expiration is? Close to here. So they had until here to be right. So if they're putting on a position here, right, they're probably selling a put down here, which means, God, I don't know, on average, oh, I'm sorry, wait, this day right here, yeah, so they're probably putting on a position down here. So it probably got tested depending on how it was that little long line right there. But anyway, so they had until here for it to be to stay above this crosshair position and for IV rank to collapse, right? And look what happened to IV rank. And that's how they made money. And guess what happened? It happened again over here, which is right, probably this day right here. Yep, I'll zoom in. Green, here you go. It turned green here, right? IV rank got to 50. How long did it take? Now it got higher the next day, so the position went against them, right? And what happened right after that? IV rank collapsed. I can change this to 5 years on the SPY. All right, and I'll zoom out. Sorry. Okay, so IV percentile rank, 82% of the days were below the past year's IV rank. So look, so here's August, right? These are the two big moves. So let's zoom into the big moves so you can see, you know, black swan event type of things, right? I'm going to zoom in right here. So this is what I mean about not getting in. IV ranks at 50. Let's say you put in 25% on one trade. Well, duration over direction. What that means is the next 3 days were painful for you, right? Because look what happened to IV. Okay. IV got to 42.25, but this on IV rank, this is close to 100. Okay, this is August. And of course, it got better, right? Because let's see, right here, 2 standard deviation, right around here. You have to make sure it stayed above this line. I'm guessing. I'm ballparking because one's 2 standard deviation away from here from IV rank, probably right around here. Actually, probably lower. So actually, you're okay. But my point, I know you're okay because it made money. But visually, I wanted you to see this, all right, on what to expect. So they put on more positions. Now, some of the bigger guys back in August, they had close to 50% of their money, not of their margin account. So meaning if you have $100,000 account in your portfolio margin, you might be able to trade up to 400 grand. But they didn't have more than 50 grand of that 100 grand. So they had a lot more margin to play with just in case, you know, something happened. But they got 50%, and look how long, count the days. Let's count the days from red to green to go red. 1, 2, 3, 4, 5, 6, 7 days, and IV rank dropped below 50% because it went to red. 8, 9, 10, 11, 12, 13, 14 trading days, 2 weeks. 14, 15, 16, 17. Usually it's 19 days. Yep, 19 days. They probably would have been out on 19 trading days with at least 25% of their max profit. So fast forward to today. You can wait. I'm sorry, what am I doing? Let's go to 6 months. All right. And I'll zoom back out. All right. So you can wait for this to turn green or IV rank if you have the old chart. To be honest, I still use this chart right here. I still use this. Oh, whoops. Well, yeah, I use this, but the most important one is this one. I still use this. Okay. Because this line is not actual implied volatility, it's actual IV rank. So you can wait for IV rank to get above 50, and it should, I'm thinking, because you know the election is coming up. So which is of course on the 8th. So in a few days, which is, wait, hold on, what is that? You got to go through and vote on Tuesday, so Monday. You can make a play on Monday and look at trading out, taking it off that Friday. And I went over that yesterday. So Indo real quick, repetition is the mother of learning. If you have an IRA account and you want to do something really, really, really basic, I've showed it in previous videos, but I'll do it again. Go to strategies. If you have an IRA account, go to this. Okay, this is a real standard golden gecko. You're going to want to do this. Okay. Oh, I'm sorry. Yeah, what did I do? Hold on. Strategies, iron condor. If you, 45 days, you can do this. Yeah, right here. Okay. So your expiration date is 43 days away. Now, and I'll zoom in. Okay, so again, oh wait, hold on, too much. I'm sorry, guys. Again, this first white line is your 1 standard deviation play right here. This second line is your 2 standard deviation line. So what you want to do is you want to sell the 1 standard deviation. Whoops. Okay, so meaning you're betting it'll stay above 196 and below 255, the SPY right here, and here's where it is now. This dark brown area is where the math implied volatility says it should stay in this range. Now, as you can see, you want to collect more money than this. So you see these strikes, move these out to that second blue line, which is what the brokerage houses determine as their risk. So you're going to sell these and you're going to buy these. The difference, you're going to sell this and buy this. The difference is here. So you have a 72% chance of probably a profit. It goes up when you take these off. Like, watch, let me delete that. Delete that. Okay. You can collect more money and probably profit stays the same. Put them back. You can go here, but you take up way less buying power. Okay, so watch. Let me go like this again. And go like this. See, your risk is undefined. I will go put these back on. And I'm doing this honestly just to show you guys how to use Dole. I'll move it around and click on this. Look. What is 10% of this? 136 bucks. You have almost 10% return on your risk right here. And you're not going to hold it for 45 days. Remember now, you want to take this whole thing off, especially these. You want to leave these on, they're fine. They're basically cheap insurance, but these right here, you want to buy back. What does that mean, buy back? Because you're selling them first. You're selling this to some other schmuck who thinks that the SPY will be below 196 at the end of 43 days. You're selling this to some other guy who thinks SPY is going to be above this in 43 days. Okay, so they gave you the money. Other people have gave you this money, so you sold it. You have to buy it back now. If you can buy it back for half of what you sold it for, that's your profit. What are your chances of being right on each position? Here you go. Okay, repetition is the mother of all learning. Now, if you're more aggressive, all right, and you want to have a play for just the election, all you do is reduce this time right here. Okay, and I'm going to move it to what? I don't know. Right here, 13 days, 8 days, in 8 days, right? Because today is the 3rd in 8 days. Yeah, this expires right after that week, right after your election, right? And then you want to move these in right here. So I'm going to move the strikes in like this. See this? So you can be right at that 1 standard deviation line, or you can move them right outside these brown lines, depending what you think will happen, right? And then, of course, move these to that 2 standard deviation blue line, so you can do these in an IRA, and they take up less buying power. All right, I'll just slide that out there. Okay, now, give it a second. It should, why is it not working? 2%, less than 1, why? Hold on, SPY, 8 days away, weekly. I gotta probably move one of my strikes in. 42. Oh, there we go. Okay, so what happened is they won't let me buy. There's no pricing. So whenever you see that happen, see how it's 0. Well, let me zoom in so you can see. See where it says 0? See where it says 0 right there? It won't let me do anything because you can't. There you go. See, make it to where it's at least. Oh, this is gonna be way out there. All right. Okay, look. So you can buy. There you go. So you can collect almost $1. You can collect almost $1, still have over a 73% chance of being right. This expires in 8 days. So that's your play. You're risking $810 to make $90. So what is 10% of this? 81 bucks, right? So you're collecting over your max profit is over 10%, a little bit of that 10% of what you're risking. In 8 days. Not too many people, and this is, so if you want to make a play like that, you can. You want to be more aggressive, move in the strikes to here just by doing this. Oh, like that. And as you can see, you can collect more money. There you go. Let it wait. All right. Hope that, that's a little, well, just stay right outside this shaded area and you'll be all right. Anyway, hope that helps. I'll post this. Any questions, shoot me an email, goldengecko@gmail.com, and I'll do what I can to help. By the way, thanks Hack, thanks Sam. You guys have been great on the forum. You guys have any questions? Ask these guys. They're on there all the time. They're on there more than me.